Bitcoin is starting to come down just a little bit, guys. If I zoom in on the chart, we continue to be stuck in this wedge pattern. I think it's amazing to watch a wedge pattern work its magic. And the reason I say that is because, again, you know, it keeps looking like it's going to break out, and then the level gets rejected over and over again. We've now rejected it 3 times. Now, this is the beauty of the methodology, folks. What I refer to the Winning Trader series is that I want you guys to think about putting the pieces of the puzzle together. So we've now hit 1, 2, 3 times. Remember when I was talking about hitting a trend line, breaking down the door. So we've only hit 3 times. So did you really expect it to break out after 3 hits? And the answer should be no. Probabilities tell us that you have to hit it 4 or 5 times to get a breakout. Same thing on the downside. This is kind of just considered one long one, but 2 and 3. So you've now essentially hit 3 on the top, 3 on the bottom, which tells us that it's very possible one of the next hits, either the next one or the next one after that, 4 or 5, creates either the breakout or the breakdown. And again, I think this is so cool to be able to put the pieces of the puzzle together from the last example I showed you over on the other side with this, because you can see how it's working its magic again and again and again. Freaking cool, guys. Freaking cool. All right. Anyways, so that's where we are at this point. One thing I want to point out to you, if we pull this chart back, there's a point where the wedge pattern, it's right over here. It's December 18th. So what I'm telling you here is that by December 18th, this chart will either have broken out to the upside or to the downside. That's it, because these lines are meeting over here, right here, and it will force price out one way or the other. Now, probably the breakout or breakdown happens ahead of that, but again, I wanted us to just be aware of that.
Hey, Money Talkers. Welcome back to Money Talks. Today, we're diving deep into the wild world of crypto ETFs, legal dramas, and market speculations. I'm your crypto maestro and I've got some spicy insights to unravel. Let's roll. Hold on to your crypto hats, folks. Analysis spills the tea on Binance and its CEO Siz's legal roller coaster. Siz has got a $4.3 billion fine to pay and a CEO chair to vacate. The crypto community split, some cheering, some nervous about what this could mean for the industry. Despite the Binance bombshell, Bitcoin's doing a little victory dance with a 5% price boost. But, and it's a big but, Uncle Sam's snooping in a Binance's closet might reveal some skeletons. Wash trading and market manipulation. It's like a crypto soap opera. We also predict a bright future for Bitcoin and Ethereum. He's betting on the approval of their ETFs, the golden ticket for mainstream investors. His advice? Keep your crypto babies off exchanges and stay cautiously optimistic. Now the million-dollar question. When will those ETFs get the green light? Analysis serves up 2 scenarios. Optimistic scenario. Binance's downfall might fast-track ETF approval, clean up the crypto streets, make him sparkle, and SEC could give the thumbs up by early 2024. Pessimistic scenario. If the SEC finds Binance's dirty laundry, ETF approval might hit the brakes. Discovery of shady business could make regulators jittery, delaying the ETF party. But hey, don't lose sleep over it. We have faith in the long game. Remember those futures ETFs? They paved the way. He's playing the when, not if card. ETH approval, it's in the stars, baby. And there you have it, Money Talkers. Binance drama, Bitcoin joy, and ETF anticipation. The crypto roller coaster never disappoints. Now let's continue our discussion with Gareth.
We know that the S&P 500 continues to be into some short-term resistance. All right, the S&P up of almost 9% for the month of November. It is amongst the biggest gains in November we have seen historically. You can see, again, the vertical move we've seen directly up into the short-term trend line of resistance. If I quickly zoom in on this, you guys can see again, there's your low pivot. You moved up to here. Now, just a couple key technical data points. So year-over-year sales for Black Friday were up. Yes, they were. So again, the consumer is still spending, even though credit card debt is $1 trillion plus. So again, the consumer continues to put more and more debt on their shoulders. And this is the key data point that I saw that made me say, whoa. So the key is this. So buy now, pay later. You know what percentage that was up from last year? By almost 50%. So there's been a 50% increase in buy now, pay later from last Black Friday to this Black Friday. Does that tell you about a consumer that is slightly getting strapped? And the answer is yes, it does. All right, so that right there tells me that we're probably still looking at a recession in 2024. The question now is it first quarter or is it second quarter of 2024? And by the way, we're going to look at gold in just a little bit. Gold breaking up, silver breaking out, continuing its breakout. Bitcoin, we'll look at that in just a few minutes. Okay, so again, we have the chart here of the S&P 500. Probability-wise, we know that the continued probability is that you still have some sort of check back. Now, how big of a check back? That's up in the air. My general consensus would be back to this gap fill here around 440 on the SPY. Now, again, remember, this is a probability game, so always keep that in mind, is that this downside move is probably favored with about a 70% chance. It still leaves a 30% chance that into year end, they could jack this market up with no pullbacks, continuing it higher towards those all-time highs. All right, so again, all about probabilities. That's what charts are doing for you. They're not giving you solidified, no-brainer, 100%. They're giving you probabilities. And if we look quickly at the NASDAQ 100, I love the doji we got last Wednesday, right? Thursday markets were closed. We got a pause, small pullback day right into this level here on the NASDAQ 100. Much the same as the spiders. The trend line again, if we look at this and zoom out on the chart and we go back a decent way here, we can see again from this point of intrigue right here, that pivot high, connected to this pivot high, we have this move right here. And again, I believe the NASDAQ's up almost 15% in the month of November. So again, a meteoric move up. A question again, does it have enough to continue up? And the answer is it may, but probabilities, again, going back to old trusty probabilities, what does it tell us? There's a pivot right in here. There's a gap fill right here. Probabilities should be a check back, and then the market decides whether it wants to push through or does it want to continue to the downside? So again, this is just what it's about, looking at the charts, looking at the data to give us a bias one way or the other. Looking at the U.S. 10-year yield, which obviously is unbelievably important. And I'm curious to see, Jerome Powell talks on Friday. So there's a speech from Jerome Powell on Friday. I'm curious if the Black Friday strength in sales, does that push him in either direction? If we look at the 10-year yield, I had some key trend lines, right? Trend line from here across, this upsloping trend line. Notice how the 10-year yield fell down and kind of is kissing this area and beginning to kind of move off of it. Now, the question I have is, do we see more of a bear flag where it goes like this and eventually rolls, or does it start to curve up? I would, in general, think this is the more likely scenario based on how far we've come on interest rates. I still think we probably have to come down a little bit more. Now, the bigger question will be is, does that create a catalyst for pushing the markets up higher, or does it all of a sudden become a panic scenario where people say, oh my goodness, the economy's starting to fall apart, and do we then see rates going down with the stock market? Remember, historically, number one, it's only when the yield curve uninverts, which, by the way, hasn't happened, that recessions come, historically speaking. And also looking at the data, we also know that the markets tend to sell off. And this is something a lot of people don't know. The stock market tends to sell off once the Fed starts cutting rates. And the reason you might say, well, I mean, what the heck? Why is it that when the Fed cuts rates, the markets sell off? Don't the markets love free money or low, cheap money? And the answer is this. If the Fed is being pushed to cut rates, we know that there's something majorly wrong in the economy. And there's going to be this fear, just like on the upside, that the Fed was behind the curve. The Fed may be looked at as being behind the curve on cutting. Oh my God, they're not doing enough quickly enough. They're not cutting rates enough to stimulate the economy. They're late. They're kind of, it's that whole inflation is transitory. They call it wrong. And the panic and fear comes in. So just remember those key notes on those two factors there, that the markets actually sell when the Fed starts to cut rates. Everyone's so joyous about rate cuts. If it actually comes to rate cuts, what is that telling us about the economy?
Rich Dad, Poor Dad author Robert Kiyosaki has advised investors to get into Bitcoin and ditch fiat money now before it's too late, reiterating that workers and savers in U.S. dollars are losers. Kiyosaki has made a number of bullish predictions about the price of Bitcoin, ranging from $135,000 in the near term to $1 million. Global investment bank JP Morgan has cautioned that the approval of spot Bitcoin exchange-traded funds, ETFs, by the U.S. Securities and Exchange Commission, SEC, could put severe downward pressure on Bitcoin prices. The bank's analysts estimate that billions of dollars could exit the crypto market after Grayscale Investments converts its Bitcoin Trust, GBTC, into a spot Bitcoin ETF. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.